Hi students, good morning. I am Dr. Matini Jasballa, Assistant Professor. In this class, we are going to learn about methods of computation of profit, Block 3, Unit 12. First, we can see the methods of computation of profit introduction. When the hire vendor sells goods of lesser value under the hire purchase system, it is not easy to maintain accounts for all hire purchases. In such a cases, the hire vendor will open hire purchase trading account and enter all the hire purchase transactions. In another method followed in this case is stock and debtor system. This system of maintaining accounting records relates to hire purchase transactions for goods of substantial sales value. In practice, however, the goods bearing small value, like that is the fridge, TV, scooter, etc., are also sold on hire purchase basis. In this basis, the retailers often keep separate records for these transactions and they compute the profit on hire purchase business separately. This involves a peculiar method of accounting and profit ascertainment. In this unit, we shall discuss the accounting treatment of hire purchase transactions for goods of small value and study the methods of ascertaining the profit or loss on such transactions during an accounting period. Next, we can see the relevant terms related to this. In connection with this accounting for goods of small value sold on hire purchase basis, we have to define certain terms before we study the different methods of ascertaining the profit or loss in such transactions. First one is cost price of goods sold on hire purchase. The second one is value of goods sold on hire purchase, cash received, hire purchase debtors, then hire purchase stock. Then we can see the cost price of goods sold on hire purchase. They purchases goods from various manufacturers and they sells them to the consumers under hire purchase system. Naturally, he sells the goods at a price higher than the price at which he has bought. His markup on hire purchase sales is bound to be more than even the cash price because he has also to cover the loss of interest on such transactions. Normally, the interest is accounted for separately as you studied in the case of sale of goods of a substantial value. Then we can see the goods sold on hire purchase. For the hire purchase system, for the purpose of finding out the profit or loss on the hire purchase business during an accounting period, we need the figure of the value of goods sold on hire purchase. It will reflect the hire purchase price of all the goods sold on hire purchase basis during the particular accounting period. However, the value of goods sold on hire purchase is not given. It can be worked out by applying the loading rate to the cost of goods sold on hire purchase. Alternatively, it can be worked out with the help of the first part of the hire purchase trading account. Then we can see the cash received and hire purchase debtors. First, cash received. Cash received refers to the total amount received during the accounting period in respect of hire purchase sales, whether they relate to previous years or the current year. This includes the amount of down payment and the amount of installments paid during the year. Next, we can see the hire purchase debtors. The hire purchase debtors is known as installment due but not yet paid. The total of cash received and hire purchase debtors taken as the realized sales during an accounting period and not the goods sold on hire purchases. Then we can see the hire purchase stock. We know when goods are sold on hire purchase basis, the customer makes some down payment and agrees to pay the balance in equal installments. The installment which have not become due during the current year are called installments. Noted due or hire purchase stock. It should be noted that hire purchase stock does not mean stock of goods in the shop. Next, we can see the debtors method. When the hire vendor sells goods of lesser value under the hire purchase system, it is not easy to maintain accounts for all hire purchasers. In such a cases, the hire vendor will open hire purchase trading account and enter all the hire purchase transactions. In another method is stock and debtor system. First, we can see the accounting treatment. What are the accounting treatment are there? The accounting treatment consists of how to record the transaction in the books of hire purchaser and hire vendor, and how to compute the interest and the cash price out of the installment price. Then we can see the journal entries in the books of the hire purchaser. The transactions I have given and the two methods are also there. The first method and the second method also I have given here. First, we can see the transaction. Asset purchased under hire purchase system. That is the transaction. You just come to the first method. First method is asset account debtor to hire vendor account. The next method is no entry. The second method is no entry. Then we can see the transaction is when down payment is made. Here the journal entry is hire vendor account debtor to cash or bank account. But in the case of second method, asset account debtor to cash and bank account. Okay. So next we can see the next transaction when interest due. Interest account debtor to hire vendor account is the first method, but in the second method there is no entry. Okay, so then we can see the next transaction when installment due. The first method no entry, but in the second method asset account or interest account debtor to hire vendor account. Okay, the next transaction is when installment paid. In this first method, hire vendor account debtor to cash or bank account, but in the second method is hire vendor account debtor to cash or bank account. Next, we can see the next transaction, depreciation on assets. Under the first method, depreciation account debtor to asset account. The second method also the same method, depreciation account debtor to assets account. Okay, so next we can see the next transaction, transferring interest and depreciation. When they are transferring their interest and depreciation, the journal entry for the first method is profit and loss account debtor to interest account and to depreciation account. The second method also the same method, profit and loss account debtor to interest account and depreciation account. Okay, next we can see the in the books of the hire vendor books, how we are writing the journal entries. The first transaction is goods sold under hire purchase system. Here, hirer account debtor to hire purchase sales account. But in the case of interest suspenses method, hirer account debtor to hire purchase sales account and to interest suspense account. Okay, so the next transaction is when down payment is received, cash or bank account debtor to hirer account. In interest suspense method, cash or bank account debtor to hirer account, the same method. Okay, the same journal entry. So here the next transaction when interest due. Here in this first method, hirer account debtor to interest account. In this second method is interest suspense account debtor to interest account. Okay, the next transaction we can see when installment is received. When they are receiving the installment, what is the journal entry for the first method? Cash or bank account debtor to hirer account. In the second method, cash or bank account debtor to hirer account. The same method. Next, we can see the next transaction, transferring interest. The first method is interest account debtor to profit and loss account. In the second method also interest account debtor to profit and the loss account. Next, I have given one problem. First, I just wanted to read the question. Listen carefully. The Madras company purchased a machine from Bombay Machine Company on hire purchase agreement on 1st January 2006, paying cash of rupees 1 lakh and agreeing to pay further installments of rupees 1 lakh each on 31st December of every year. The cash price of the machine is rupees 3,72,500 and the interest is charged at the rate of 5% per annum. The Madras company writes off 10% every year of the value of machine on the reducing installment system. Open necessary accounts in the books of both the companies. First, we can see the aspect is the calculation of interest and the amount in the installment, how they are calculating the interest and the installment amount. Okay, so here the first particulars column, the cash price, interest percentage, then we can see the installment. Installment means the cash price as well as the interest rate also I have given. Okay, then the total column is there. See here, the first we can see the cash price. How much is the cash price which was given in the question? 3,72,500, isn't it? So here the interest rate is how much? 5% per annum. Okay, here the Madras company writes off 10% every year. Okay, listen carefully. Here the cash price is 3,72,500, but the rate of interest is 5%. Okay, from this we have to calculate the interest rate every year. Down payment, how much they have given in the question? 1 lakh rupees is the down payment, right? So first we have to write it the cash price. Total amount is 3,72,500. Okay, the next line we should subtract the down payment. Okay, less down payment. The down payment we are giving to the particular company, right? So after writing it, just to subtract this amount from this 3,72,500, you will get 2,72,500. Okay, this down payment there is no interest are there because initially we are giving that amount. So here you have to write it 1 lakh rupees cash price. There is no interest is there, so no need to write the interest. Okay, in this total column you should write it 1 lakh rupees. That is the amount the company paid to that particular company. Okay, so here let's first installment. Okay, for the first installment we should find out the interest rate. Interest how much? 5% they are giving the interest. Okay, so you have to calculate the 5% interest rate from this 2,72,500. Why we are calculating the interest from this 2,72,500? Because already we have given 1 lakh rupees as a down payment. Now the balance amount is 2,72,500, right? So we should calculate the interest from this amount, 5% from this amount. You will get 13,625. Okay. The installment amount is 86,375. 86,375. So just you subtract that 86,375. 86,375. You will get the balance 1,86,125. 1,86,125. Then here you should write the installment amount 86,375. Then the interest rate also you have to write it here. Okay. So then you come to this second installment. Second installment they are giving how much? 90,694. 90,694. Okay. So how much is the interest rate? Here we have to calculate 5%. It will come 9,306. 9,306. Okay. Here you should write the cash price 90,694. In this interest rate, interest amount 9,306. Okay. Then you should subtract this amount. You will get the balance amount 95,431. That is the final installment for the company. Okay. So we are going to give the whole amount. This is the third installment, 95,431. For this also 95,431 into 5 by 100. We should calculate 5% interest from this amount. Okay. How much is the amount? 4,569. Okay. This amount 95,430. Or should just you put the total in the outer column, you will get 1 lakh. When you are adding this amount, you will get 1 lakh. For the next year also 1 lakh. The last year also 1 lakh. Total amount, how much? 4 lakhs. Here, cash price 3,72,500, right? Interest we are paying 27,500. Okay. Then we'll move further in the books of Metros company. Metros company books, how they are writing the journal entry. First, we have to write the journal entry for purchase the machine. Okay. So machine account debtor to Bombay Machine Limited account. Machine account debtor to Bombay Machine Limited account. How much is the amount? 3,72,500. Okay. You can write it in the narration. Being asset purchased on hire purchase from Bombay Machine Limited. Okay, then you come to this next journal entry. Bombay Machine Limited account debtor to cash account, because the company is going to give money to them. Okay, Bombay Machine Limited account debtor to cash account. How much amount they are giving on the basis of down payment? 1 lakh rupees, right? So you have to write it 1 lakh rupees, being down payment of rupees 1 lakh paid. Okay, then we can write the journal entry for the interest. Interest account debtor to Bombay Machine Limited account. Already we have calculated the interest 13,625, right? So you have to write it journal entry for that interest amount. Interest account debtor to Bombay Machine Limited account. How much is the interest? 13,625. Being interest due for the first installment. Okay, interest due for the first installment. Here we didn't pay anything. Just we are calculating interest for that. Okay. So next you come to this. To write the journal entry for the first installment payment. Okay. Bombay Machine Limited account debtor to cash account. How much is the amount we are paying for the first installment? 1 lakh rupees, right? Including the, what is that? The first installment amount plus the interest rate. We are paying the 1 lakh rupees. So that the journal entry is Bombay Machine Limited account debtor 1 lakh rupees to cash account 1 lakh rupees, being first installment paid. Okay. Then we should calculate the depreciation. We should write the journal entry for the first year depreciation. Okay. Just mentioned in the question. Being depreciation charged at the rate of 10% on cash price. Okay. So first we should write it. Depreciation account debtor to machinery account. How much is the value of that asset? 3,72,500, right? So we should calculate 3,72,500 into 10 by 100. So depreciation account debtor 37,250 to machinery account 37,250. Okay. Then we can move for the profit and loss account debtor 50,875 to depreciation account debtor 37,250 to interest account debtor 13,625. We are transferring that amount to the profit and loss account. Here the depreciation is there. Previously we have calculated the interest. Both the depreciation and the interest amount we are transferring for the profit and loss account. That's what we have done this journal entry. Okay. So then we'll move for the interest due for the second installment. This interest amount also already we have calculated. Okay. Interest account debtor to Bombay Machine Limited account. Interest account debtor 9,306 to Bombay Machine Limited account debtor 9,306, being interest due for the second installment. Being interest due for the second installment. Next we can see the next journal entry. Interest account debtor 4,569 to Bombay Machine Limited account letter. Be interest due for the third installment. How much is the interest? 4,569. Okay. Then we can see the installment amount for the next installment. Bombay Machine Limited. Bombay Machine Limited account letter to cash account. Bombay Machine Limited account letter to cash account. Bombay Machine Limited account letter to cash account. How much is the amount? 1 lakh rupees. Right? 1 lakh rupees. Okay. Then being third and final installment, the amount paid. Then depreciation account letter to machinery. Depreciation 30,173. Diminishing balance method. Okay. We should calculate the depreciation after subtracting the first year depreciation and the second year depreciation. You will get the balance amount. Okay. From that balance amount, we should calculate the depreciation. Okay. Depreciation account 30,173 to machinery account 30,173. Being depreciation charged at the rate of 10% on cash price. Then we can see we are transferring that interest and the depreciation to the profit and loss account. Profit and loss account at the 34,742 to depreciation account 30,173, then to interest account 4,569. Being depreciation and interest is transferred to profit and loss account. Then we'll move for the machine account. Okay, the machine account also we should prepare the machine account. First we can write it to Bombay Machine Limited account. To Bombay Machine Limited account. How much is the value of that machine? 3,72,500, right? So you can write it in the amount column. You should write 3,72,500. Every year we should calculate the depreciation, right? The first year depreciation how much? 3,72,500 into 10 by 100. That is 37,250. Just to subtract that the depreciation value from this total amount, you will get the balance 3,35,250. 3,35,250. Just you put the total. Just you brought down that value for the next year to balance BD. In the second year, you should write it to balance BD. 3,35,250. 3,35,250. From this amount, we should calculate 10% depreciation. By depreciation account, 3,35,250 into 10 by 100. 33,525. Just to subtract it, you will get 3,01,725. By balance, you put the total 3,35,250 in the both sides. Okay, just to brought down this balance to balance PD. We should write here to balance PD. How much is the amount? 3,01,725, right? For this amount, we should calculate the depreciation for the third year. So you can write there by depreciation account. For every year, all the 3 years, we should calculate interest. We should calculate depreciation. According to this, you should write the journal entry for first year, second year, and third year. For all the 3 years, we should transfer that to profit and loss account, or transfer to the profit and loss account for the values of depreciation and the interest value. Okay, interest also we should transfer to the profit and loss account. Here, see depreciation how much? 3,01,725 into 10 by 100. You will get 30,173. 30,173. Just to put the total here, subtract it, you will get 2,71,552. 2,71,552. So you should write there by balance CD. By balance CD. This is the machinery account. Then we can move for the Bombay Machine Limited account. You should prepare the book of Bombay Machine Limited account. Okay. By machine. You should write by machine account. How much is the value? 3,72,500, right? So you should write here by machine account 3,72,500. First we have paid rupees 1 lakh, right? Written down payment, right? Okay, so you can write here to cash account. To cash account, how much is the amount? 1 lakh. Okay, to cash account 1 lakh. Okay, so then by interest, the first year we are paying interest how much? 13,625, right? So the first installment amount year end how much we are paying? 1 lakh rupees. That amount also we should write here to cash account. To cash account 1 lakh rupees. Okay, 1 lakh rupees. Just to put the total 3,86,125. Just to subtract 3,86,125 minus 2 lakhs, you will get 1,86,125. So you can write here to balance CD. To balance CD 1,86,125. So you brought on that balance by balance PD 1,86,125. 1,86,125. Then the second installment we should pay, right? How much is the amount? 1 lakh. That is interest plus the amount. Okay, to cash account 1 lakh. To cash account 1 lakh. Okay, by interest. By interest how much? 9,306. 9,306. Just you put the total here 1,95,431. 1,95,431. Put the total both sides 1,95,431. Just to subtract 1 lakh, you will get the balance amount to balance CD. 95,431. 95,431. Just to brought down that balance amount by balance PD. By balance PD. How much is the amount? 95,431, right? 95,431. Okay. Just to calculate the interest by interest. 4,569. 4,569. Just you put the total 1 lakh. Both sides 1 lakh. The value is nil. Okay. Then we can move for the books of Bombay Machines Limited. The books of Bombay Machines Limited. Okay. What is the journal entry? We should write it. Madras Company account debtor to hire purchase sales account. The books of Bombay Machines Limited. We should write the first journal entry. Madras Company account debtor 3,72,500. This is the value of the machinery to hire purchase sales account. 3,72,500. In the bracket, you should write the narration being goods sold under hire purchase system. Goods sold under hire purchase system. Then down payment. For the down payment, we should write one more journal entry. Cash account debtor to Madras Company account. Cash account debtor 1 lakh rupee to Madras Company account 1 lakh rupee. To Madras Company account 1 lakh rupee. Being down payment of rupees received. Being down payment of rupees 1 lakh received, right? Then for the interest for first installment, Madras Company account 13,625 to interest account 13,625. Madras Company account debtor 13,025, 13,625. Then to interest account 13,625. Being interest due for the first installment. Okay. The next journal entry. Cash account debtor to Madras Company account. Okay. Cash, how much they are receiving? 1 lakh rupees, right? Each installment they are giving 1 lakh rupees, including the interest. Okay. Cash account debtor 1 lakh to Madras Company account debtor 1 lakh. Being second installment received. Okay. Then we can see the next journal entry. Madras Company account debtor to interest account. The next installment interest due, right? Madras company account debtor 9,306. To interest account debtor, to interest account 9,306. Okay, Madras company account debtor to interest account. Okay, being interest due for the second installment. How much is the due? 9,306. Okay, then for the second installment payment, you are receiving the payment from the company. What is the journal entry? Cash account debtor 1 lakh to Madras company account 1 lakh. 1 lakh including the interest. Okay, cash account debtor 1 lakh to Madras company account 1 lakh being second installment received. Being second installment received. Then we can see the next journal entry. Madras company account debtor 4,569 to interest account 4,569. Madras company account debtor 4,569 to interest account 4,569 being interest due for the third installment. Okay. So the next journal entry for the payment. Cash account debtor 1 lakh to Madras company account 1 lakh. Cash account debtor 1 lakh including the interest to Madras company account 1 lakh being third installment received. Okay. Thank you.